Y'all listening to the Whiskey and Insurance Podcast with your hosts Luke Eckley and Marquand Hughes. In this episode, Luke and Marquand sit down with Tom Morgan from American Senior Benefits to dive into the world of life insurance. They explore Tom's journey in the industry, the evolution of life insurance, and essential strategies for boosting sales and client engagement. Take a seat and take a sip. It's whiskey for the soul and insurance for the wallet.
Welcome back.
Yeah.
We got a little bit of a different one. I will say that was lackluster with Talbot. I'm used to looking this way, and Talbot's over here. Welcome back.
I'm not Talbot, you all. I'm somebody completely different.
So we're giving you a little bit of a new thing. We're filming. It's last preseason week. You'll see this the next week after preseason, but it is Red Thursday, as one could say.
Yes, sir.
And Talbot's on his way to a Chiefs game to have some fun right now. Hey. So I guess you can't complain about that.
Nope.
So
nope.
Yeah.
You'll give him some stuff on the next podcast.
Yeah,
you guys like to talk trash.
We always like to talk. But we have something new this week.
Yes.
We do.
Yes.
So I would love to introduce, we got somebody new that's up here with us this week. This is Tom Morgan. And Tom's got a long history of being in the insurance industry, the insurance space. And we have it's a special guest. He's brought us a special bottle that he's done on a specific deal that was sent to him one point in time. So we may have to find that story. We may have to talk. We'll jump into that story more than likely.
Excellent.
But Tom works with Integrity Group Marketing, right? Or Integrity Marketing Group is what I should say. And what's your role at Integrity?
So I work for American Senior Benefits, who is owned by Integrity.
Got it.
And my role is Vice President of Life Development. So what I'm doing is teaching different channels of distribution how to sell life insurance and refer business and things like that.
Yeah,
absolutely.
No, that's fun. See, what most of our audience, Tom, and I was kind of mentioning this to you before, are insurance agents, people in the industry. They're listening for information. They're looking for information, or they're looking for a career in insurance. Yep. And so this is a perfect thing. We always talk about health insurance and group health, and we talk about Medicare because Marquand helps lead our Medicare team. And being in U65, Apollo built our brand around helping individual U65 families, small business owners, those types of things. And then we talk about employee benefits. One of the things that we don't talk enough about is life insurance in particular. So one, I'm excited to give the viewers and listeners some nuggets, golden nuggets from your experience in the life industry, and really kind of give them something new. So one, I'm excited about that. But let's jump into this bottle that you've brought this week. It is Whistle Pig, and I'll grab this bottle. But it's a small batch rye, aged for 10 years. And as I am popping this open, I would love for you to share your story of how this got introduced to you.
This actually, Whistle Pig was a gift to me probably about 3 years ago. And it came from a good friend, an agency owner that I was working with. And we were trying to penetrate the property and casualty marketplace to cross-sell life insurance. So I worked for a carrier at the time and had to put our actuaries together and build a product that was very simple for property and casualty people to sell and not go through all the underwriting hassle that you go through. So once we got everything done, it took us 2 years to build this platform. This showed up at my house.
I bet it did.
I did not get you what I got. It came in a big box and some cubes and glasses.
I'm disappointed we didn't get the big box. What's up with that?
Hey, we got the good stuff. We love what's in it. My box is empty. There's nothing in it now but empty glasses. So we got the good stuff.
That's really cool.
That's awesome. Can you share in the life insurance in a deal that you're working on? This is what I find fascinating because, and I don't know if you can share on this particular deal that you did, but what was the revenue that was driven on this particular deal? Do you remember, roughly?
Roughly, when you say revenue, like premium, total premium coming in the door?
What? Yeah, you can talk about premium. That's fine.
Yeah, premium revenue. If you were to talk revenue, you'd probably want to go about 150% higher than what I'm going to tell you.
Okay.
But right when we rolled it out, property and casualty is a marketplace that's really transactional. It's not a conceptual sale. So they're really used to pricing things and saying, oh, I can beat this price. I can beat this price. Well, life insurance is a conceptual sale where you have to paint a picture. You know, if you're out of the picture, this is what your family looks like. So we got to do the math backwards. And it's not, hey, who gets the best price? Let's build this first and find the right product. Well, that just doesn't resonate with the PNC guy. They're fast. It's dialing for dollars, and I got somebody on the phone. So we had to build something really fast. When you get to the revenue side, I think in the first year, it probably brought in $2.5 million. Nothing huge, because we didn't want to just dive in and put this all over the country. We had to build it and beta test it and drive it out. So the marketplace now and where it's gone, this is humongous. You know, we're talking 20-fold what I guess. So it was penetrating, building, establishing, knowing the network, and then testing it and getting it out.
What was the specific product that you guys were bringing to market?
There was 2 platforms, and basically you could either do a term insurance, which you know is basically 10, 15, 20, 30, or a return of premium, which are usually 20 or 30, where you get your money back, but it's a higher premium. But where we did this, because it was a property and casualty market, we had to get in their head and how do you sell? Where's your network? Where's your niche? And we tied it to the homeowners insurance that they sold. So we had enough data to give them a quote up front, and they would know, hey, Miss Jones, you've got, 15 years left on your mortgage, and you got 150,000 left. Well, I'm going 150,000. God forbid something happens to you.
Covers your mortgage
that fast.
Boom.
Oh, for $47.50, we can get you right now.
Makes sense.
And so we made it that quick, that turnkey. The underwriting was like 10 questions.
10 simple
and
questions.
You got it or you didn't. So it wasn't all the mess you have to.
So you had nothing that would be questionable. Nothing would go to underwriting. If it kicked out, if there was a yes to any of the 10 questions, it was an automatic no.
For that product.
Got it.
We weren't going to lose the sale. No, we had plan B. Plan B is underwritten.
I'll take your glass while I'll pour you a nice.
So we had plan B and C. So, but that we were trying to make it very transactional friendly for that marketplace.
That was a good one.
That was nice.
That was a good one.
I heard that one.
Yeah, we always try and pop the cork for it.
Oh, memories! I can smell those. Yeah.
I'll give that to you.
Thank you.
Mark, you want to?
But that's very smart to tie it in with the home mortgage insurance, to put that product, attach it to that like that.
Now, a great friend of mine. And I'll drop a name.
Yes.
Jacob Neighbors out in Oregon. He's working with a big aggregator now, High Street in Traverse City. But when we were building this, some of the training we did to help them understand, it wasn't all the product as much as it was how to transition the sale to life insurance. And guess what, though? Do you want fries with that? We took McDonald's concept, put it in the PNC world, and it was like, hey, Mr. and Mrs. Jones, we just did your car insurance. We just did your homeowners. Would you like to add some life insurance? God forbid something happens to you to pay the house off. that was it. That's all we taught everybody.
Simple, but effective.
Yeah.
Wow.
Absolutely.
No, that's awesome.
You'd think it would take less than 2 years to figure that out. But it took us 2 years to figure that out. A lot of trial and error.
Yeah.
Well, once again, as we dive into this, and we'll go into the bottle first and go into our normal rating of the whiskey, what we would rate it on a scale 1 to 10. But I'm just super excited once again to talk about life insurance, the difference of how it pays compared to typically on health insurance. There is higher premium or a higher commission year one simply because it's the way it's structured compared to where health is more level, but you don't have that high year one fall off year two. But life's a very lucrative industry. It's been around a very long time, and I don't see it going anywhere anytime soon. So,
I don't think so.
yeah. So this bottle, as we dive into this, what we like to do first, before we taste and do a toast, we like to get some of the smell and the aroma. So, and you may already know this because you've tried it before. I'm not for sure, but I have the taste and the off of the nose, and then I've also got off the palate and the finish. Well, I'd love to see if you guys can figure anything's off the nose right now.
I have a citrus. Is there any citrus?
There is citrus in it.
Okay.
Yep.
Good job.
Can you? What would be citrusy?
Okay, like orange.
Orange peel.
There
Yeah. There you go. We gotta get
You like that?
that? You like
Great
that?
job.
I don't know. Vanilla?
No.
No
but you're-
vanilla.
No, but you're close.
Cinnamon?
No. Think sweet. What do we have that's sweet?
It's honey.
You're really close.
What is it? Look.
Man.
Starts with a C.
C.
Cane sugar?
I was thinking the same thing.
Caramel.
Cane sugar.
Caramel.
Ah.
Yeah. So we got that on the nose.
Okay.
Obviously oak from it being in a barrel.
Mm-hmm.
And then it's got a allspice off the nose. So a spice they're saying is off the nose, but we'll do a little whiskey for the soul.
Yep.
Insurance for the wallet.
There you go.
Now, that tastes pretty good. What I'll tell you, and
That is really good.
off the nose is caramel, however you want to say it. That's also on the palate, obviously. And what did you say? Did you say what else?
Go ahead and say it.
Vanilla. Vanilla's
Yes, I
in
did.
this. So, what's spice? But there's two things left here. One of them
And I'm missing.
we've had in one bottle that I loved.
Gosh.
And I tasted in here after.
And it was
No, it's
unique, too.
It was unique. We've had it in one bottle.
It's very unique.
And it would be something that drives a flavor, a sweet flavor to the finish. This is specifically on the finish. It was our very first bottle that we ever did.
Better
Do you
test it
remember?
again.
Yeah. I remember the first bottle. I don't remember what it is. You're asking me to go 45 episodes.
Yeah, this is this is the 46th episode. So that's a lot of whiskeys. There's 45 whiskeys in between these two.
Yes,
all right, it was our
yes.
very first episode.
Gosh, look.
Butterscotch.
Butterscotch.
There's butterscotch in this,
good, yeah.
and I love that because
Yeah.
I think it adds a unique flavor to the whiskey. It really does.
It brings it home.
There's one more in here. Think spice. Think of a leaf. Something that would add flavor. Not really a spice, but think of a leaf that would add flavor. Mint.
Bingo. I got
There
one.
you go. Absolutely.
But yeah, no, absolutely. I kind of like this. But
Yes.
our next thing that we do after we go through the flavors is, and I don't know what the price of this. I think it was a $90-ish bottle. We rate it. Price, taste, flavor compared to the whiskeys. 10 being a 10 out of 10, 1 being horrible. So,
Yeah, let our guest go
guess
first.
first.
Well, I haven't sampled the 45 others, but it's my favorite for sentimental value.
Yeah.
So I'm going to give it
Yeah.
a high 9.
Okay,
Yeah,
okay.
it's
high
a
nines.
9.7.
Okay,
Yes.
okay, yeah.
Yeah.
All right, Mark, what do you got for it?
This is really good. It's smooth going down, but it's a punch, which
Yeah.
I like. I don't
Yeah.
like it too sweet. Right?
Yeah.
Too sweet, I don't feel like a man. I don't feel like I'm
Yeah.
drinking what I want to drink. So I will give it.
It does kind of hit you.
It does. It's a punch.
It's 100 proof.
Okay. Makes sense.
Yeah.
I would say this is a big one. I would say 8.5, 8.5.
8.5?
Yeah, I like it.
I was gonna go right in that 8.7. It's not quite a 9, but it's a high B plus.
Yep.
87, 8.9, somewhere in there. So I like it because butterscotch is unique. We've done 46 whiskeys. Only 2 bottles have had it in it, and I love the fact that it's got butterscotch in it.
Yeah.
And I like butterscotch. It's a unique flavor.
Yes.
The other thing is it does punch you, which I thought that it would be higher than 100 proof. The other bottle that we did that was butterscotch on our very first one's actually been our highest proof bottle to date. It was 130 proof. So it hit you pretty hard. It was called Horse Soldier. It's a good one to go check out, believe it or not.
Yes. Very good story too.
It's got a good story. The steel's placed on the front of the bottle, and it's from the steel of 9/11. Horse Soldier. It's from the Green Berets that would travel into Afghanistan on horseback.
Wow. Okay.
So yeah,
Good story.
it's got a really cool story behind it. It's one to go try. So it'll bite you though. What was it?
Strong.
good.
120.
What-
I think it was 100.
130.
130.
I can't remember what was it. The owner said it'll hit you like the first sip will hit you like something.
It had to be something, a bullet. It was something
yeah,
like
hit you like a bullet.
Yeah. It was It was something like a hot bullet or something like that.
But it's kind of funny. But now that we've tried it,
Yes.
and we transition, Mark, this is kind of our fun time that we get to interview Tom.
Yeah.
And we get to talk about Tom's history,
Yes.
professionally, personally, why he got into what he's doing now, where he spent most of his career, and what successful things that you'd like to leave with our viewers and whatnot. So, do you want the honors, or you want me to ask the first question?
No, I think you just open it up. Tell us where you got your start.
Tell me your story. We love to hear the story of things and why you're doing what you're doing.
Yeah. So right out of college, well, 3 semesters before graduating college, I decided to get into sales. Okay. And then at the time I was placing and trying to figure out where, and wanted to get in the financial industry. So I knew right out of college I was going to do this.
That's what you wanted to do.
So funny story, if you want to talk about
I love it.
So I got a basketball scholarship to a small college, Birmingham Southern College.
Yeah.
If you remember the team that was in the baseball playoffs that the college went out of business and they were still playing, that was my old school.
Okay.
And the better story is my father was the inaugural pitcher for the first team they ever had. Wow.
Some history there.
They're gone. Well, they weren't, but the college is. So fun story. But so it's funny how life changes, and my whole story wasn't planned. I mean, it just evolves, and I can relate this to anybody getting in the industry, or if you've been in the industry, how your path works.
Yeah.
There's only like 3 things that move your path.
Yeah.
So my first path move was my whole family was doctors, dentists in the medical profession. So it was like, and I'm the youngest of a big family, so it's just like, oh yeah, you're gonna do that.
Yeah.
'Cause that's all anybody knew. And my dad's like, you're doing that.
You're gonna be a doctor. Go be a doctor.
Yeah. So, you have to major in chemistry and all this stuff. Yeah. So luckily, where my path changed is one of our boosters. We're riding on a bus from one of the games, and he was my chemistry advisor. And he says, Tom, what the hell are you doing? Taking chemistry and in this. I said, oh, my dad said I need to do this. He goes, it's time for you to decide what you want to do.
Yeah.
And I go, I can't tell my dad that. And then he goes, guess what? You got a scholarship. You can.
Yeah.
So, we had that bad, hard conversation. Hey, I'm not going this path, Dad.
Yeah.
But my brother, my other brother, my uncle, my nephew, everybody's it. So that's the only path. And it's not to argue or anything, but that was kind of the thing you did.
That was a family. That was a family, yeah.
He couldn't give me any direction where I was going. So
was your dad a doctor?
he was a dentist.
A dentist,
So
okay.
there were dentists and doctors and all over the place.
So he was like, yeah, you've got to go
You got to
something
go this
medical.
path.
So when you pivoted, I assume you pivoted to business.
Yeah, so actually it really was more of an evaluation. So on that ride from the game, and I think actually we won, thank goodness. So it was a good conversation. I was sitting up front, when we lost, we had to be quiet and sit in the back.
Yeah.
But the advisors and the coaches are up front, and we just had that conversation. He goes, well, Tom, you know what? Let's get you with the counselor. Let's do some testing and see what you'd be good at.
Yeah.
And so just went through everything, and it was just like off the chart. Sales. So then it was like, what kind of sales? And so from there, we looked and did everything. And I just, from there, did some interviews with companies and looked at, and it just all gravitated toward finance.
Yeah.
So that was a long story. Sorry, I'll get it a little
cool.
briefer. But that was another path that I didn't choose. It
Yeah.
just like kind of came and we figured it out.
Yeah.
So it's okay, I'm going to go all in. So right after I graduated, got all my licenses, securities license, life license, whole ball of wax. Go with a company that has evolved as well. It was called IDS American Express back then. Now it's called Ameriprise.
Okay.
Wow. Yeah.
Manager walks in, congratulations on all your tests. Boom, throws a phone book on my desk, says, go get them, pal. So that was our CRM, our marketing, our website, and everything.
Go
right
make
there
some
in that
dials.
book. Just pick up the phone, son.
Yeah.
So I did that, and through a lot of calling, doing meetings and financial plans. When you get a good client, stumbled across a business owner just by chance. Do a financial plan on the business owner. we get through the whole thing. It was like very big. It's like, wow, okay. So I had to get a manager and all to come in and
help.
teach me. It's like, well, there's tax shelter stuff you can do with this guy. Come on, I'll go. So, well, I'll split it with you. You teach me how to do it. And then we're walking out the door. This is how green I was. We're walking out the door, and he goes, Tom, I got 10 employees. Can you talk to them too? Oh, light bulb. Wow, that phone book just got illuminated because I made one phone call.
Oh, yeah.
11 appointments.
Appointments.
So that's what directed me to go, I'm going to start working the business market and market to that. So that evolved from, learning everything, doing retail, meeting with employees, and then getting into that next phase was a little more advanced.
Yeah.
Working with mentors and specialists and partnering with them. And that's kind of where I am now because I knew I couldn't do it.
Yeah.
I'm this, 23-year-old guy walking in a company. The guy owns the company. I'm intimidated. But if I bring a manager or somebody that knows what they're talking about, I'm not going to get stumped.
Yeah.
So with that, just let's fast forward. I have 30.
Really quick before you fast forward, I love to ask these questions, if you don't mind. Even though it would have been a while ago and you're 23.
Yeah.
What were some of the lines that you would say to get a business owner interested from your phone calls so that you could set an appointment?
Yeah. Well, this is going to show what 30 years looks like backwards. There was not, I'm going to go to a database and look and I'll go to the Census Bureau and I'll figure out who's who.
Yeah.
There was a library.
Yeah.
Library. Do you guys even know what a dot matrix printer is? The paper actually had tear off dots on the side so that it could coil and spit it through the printer. So at the library, they were the only ones, the sheets of paper were this long and they hung them on poles like this and put them on stacks. But in that data, it was called Dun and Bradstreet. Dun and Bradstreet would do all the research. So my thinking and our business plan and figure this out on my own. I go, I'm too nervous to go talk to a 500 employee business owner because I know Merrill Lynch or somebody's in there and they'll kick my butt. And so I got every company in Birmingham, Alabama that had 50 employees or left, cross-referenced and found it would tell you who owned it, who was the HR director and what. And so that was my list.
Yeah.
So then from there, email wasn't big. I think AOL may not have even existed then.
Yeah.
So it was the phone.
Yeah.
The phone and just calling. And what you were asking was what was the script?
Yeah.
It's basically, hello, Mr. Jones. I see you're running a pest control business and you've got about 10 employees. Have you structured anything that you can run through your business that's a tax advantage that you can put money in your own pocket for you and your family? That's how it started.
A lot of times why I asked that, even though it was 30 years ago, it still
doesn't
can apply
change.
today.
Oh, it does.
I mean, a lot of times, yes, you adapt and you adapt with technology and you adapt with different things, but at the end of the day, I still think the phone is the moneymaker.
It is.
You got to pick the phone up in today's day and age still. Can you do stuff online? Yes. Can you do things and utilize social media? Yes. Can you utilize ads now? Yes. Different than, back then it would have been more of billboards or magazines or newspapers. Those would have been your ads. Now it's all online. So a lot of those things are different and unique, but that phone script, that initial catch, that initial hey, you got to pick the phone up and dial, it still exists to this day.
I don't remember where this came from, but a very good friend of mine that we built an agency from 3 to about 247 in 2 years. Taught me what his mentor told him: your first 16 words close the sale or not.
Yep.
So make sure you're getting to the point quick.
Yep.
Especially with the business owner
they don't play around.
Something shiny, they're gone.
It's so true though. It still rings to this day.
So do your scripts.
Yeah.
Fine tune them. Put all the good stuff in the front.
The first 16 words, you'll win it. Yep. And it's the elevator pitch. You got 7.5 seconds. Yep. Those 16 words, you got 7.5 seconds to catch that business owner's attention or not.
Yep.
So those 7.5 seconds, are you going to sit there and waste and say, my name is Luke Eckley from Apollo Insurance Group? Nope. That's 4 seconds. No. They don't need to know your last name. They don't really even need to know your company. Say, hey, this is Luke. I helped with this. Right into it.
Perfect.
Yeah.
That's what you need to do, in my opinion, from what you see success on. Do you want, because as soon as someone calls me, I'm the same way. Someone calls me and they're a salesperson. They're like, "Hey, my name is Luke, and I'm from blah 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 blah." I'm like, immediately I am turned off. I'm turned off, and I'm like, I don't need you. I don't even listen to what they say. I don't need your services. Thanks, bye. And I hang up.
Yeah.
Now, if they do something different and they have a different approach, guess what I end up doing? I end up listening. I end up. Well, yeah. Believe it or not, I do shoot my shot every now and then on these. Hey, you should. You got thought about health insurance? Have you thought about insurance? Period. Yeah. Are you wanting to potentially leave and do a different industry switch? Yeah. Have you heard of residual income?
That's awesome.
Yeah,
awesome.
But yeah, no, you pivot. You can definitely pivot, and I do that on the pest control guys.
Yeah.
Pest control always comes to my house. And I think the door-to-door knocking is just, man, I wouldn't want to do door-to-door. I'd rather pick the phone up 100 times every single day and twice on Sunday than go do door-to-door. But those door-to-door guys have got some nerves of steel, in my opinion. And some the ones that are good, I'm like, hey, you interested in a job?
Exactly.
Because, seriously, I mean, I respect what they do. I really do.
I think it's crucial, and I think you're 100% right. Just like you said, it's that first 16 words there.
Yep.
Because business owners, they really don't have a lot of time on their plate, right? They have everything on their desk, right? And they're high Ds, and we call those dominant people, right? They like to get straight to the point, right? They want stuff done quick and in a hurry and efficient. If you're wasting my time, I'm getting off the phone. And so you have to match that energy. You have to be quick, you have to be efficient, and you have to get your point across very soon. Yeah. And so I agree 100%. 100%.
Yeah. So then you're doing that, and you're Southern. You've got a little bit of a Southern draw to you now. Is that Alabama or is that Georgia?
Could be Jersey. I live there too. But I doubt it.
Okay. And we went to a Birmingham school, so I'm here in Alabama. Are we Alabama in here?
Alabama,
Okay. All right.
Okay.
And so we try IDS, now Ameriprise. Ameriprise. Where do we pivot to next in this career?
So once again, not planned. Basketball league. Someone tells me, hey, so-and-so's retiring from this position and they're working in the pension marketplace. You really ought to talk to them. So, it's not going to hurt. Went and talked to them. What happened there in Birmingham, same thing. This was an organization called VALIC, Variable Annuity Life Insurance Company. They're in Houston.
Okay.
Big tower. They had a niche working with employer groups, 403B plans.
Got it.
I got the job, let's say the less. But what happened is I got a territory, University of Alabama, a few school districts. Then I kind of gravitated, got in the hospital. So I learned that business. And what I did in that business was enroll for the payroll deduction. But I saw what you just said. There's big money in life insurance. And I always cross-sell, just naturally cross-sell life insurance. Yeah. And that, I think, came from a good base from the beginning, understanding financial planning and how life insurance fits in that.
Did you compete with the Alabama Farm Bureau? Alpha?
Yeah.
They're pretty big down there.
Now, when you get away from a college or a university and you're in the farmland, yes, you're going to see them a lot. You're not going to see them downtown. But yes, you're
I don't want Tom to get into he's getting into the good stuff. I want us to take a break. This is a good time for our ad read.
Okay.
We want to shout out our sponsor, Apollo Insurance Group. They help, again, with all of what we do with our podcast, all the equipment, etc. Also, remember, it's health insurance that we specialize in. So if you need any health insurance, accidental coverage, we also do life insurance, Medicare, we do it all. So make sure you have a brokerage that is knowledgeable about what's going on in the industry that can lead your path to get you some great health insurance and make sure that you are ahead of the curve. If you need any help with that, Apollo's your people. We're here for you and we will fight for your behalf. And so make sure that if you need us, you reach out to us.
Welcome back.
Yes.
Thanks, Mark, for that ad read that we did. And then also I wanted to add thank you, Tom, for sponsoring this particular episode with the Whiskey Whistle Pig.
Absolutely.
So, shout out to Tom. But jumping back into where we were at, and you were at Valak, and you were talking about that story of just what you were talking about, what products that you guys were specializing in. Let's talk about that. What did that lead to? What did VALIC lead to for you?
VALIC actually was an annuity.
Yeah.
And they structured it where it looks like today's 401ks.
Is it a variable or fixed?
Variable.
Got it.
Company's name, Variable Annuity Life Insurance Company.
Got it.
But they spun it and got into the market where it was 403Bs, 401ks, 457. So I could work with a police department. I could work with a hospital. I could work with a university. I could work with a K through 12. So from that, this is an evolution that makes another change in my career.
Before we jump there, can I ask a question that we provide the listeners? Because some people, obviously us in the industry, know what a variable annuity and a fixed annuity are.
Okay.
Let's jump into the difference between a fixed and a variable and why someone should have one over the other and where the benefits are of those.
Perfect.
What's the biggest difference between the two?
Yeah, so fixed is a guaranteed interest-bearing account like the savings account at the bank. It's going to pay you X. It's going to guarantee you that. It's not going to go down no matter what the markets does. It's not tied to it.
Can't lose your basis. What you put in it, your basis will never drop below what you put into a fixed annuity.
And you can project out pretty good because you know that number's there.
Fixed.
Variable annuities are the opposite. They have, and what I mentioned 401k, those with the 401k, you look at your statement, you probably got 10 or 12 options. Well, same thing in a variable annuity. They'll have, they call them sub-accounts, but they're technically a mutual fund. They mirror what a mutual fund does, but they're a sub-account of the annuity. And there's typically, I mean, these days there could be 30 in one of these that you can choose from because there's so many different options. And that you can layer it for protection with, okay, I'm going to put a portion in the guaranteed account, and then I'll go a little aggressive and go international fund here. And then I'll do like the S&P 500 blue chip stocks that are pretty stable here. And so you layer it and you're looking for long-term growth. If you're going to retire or you want to get performance in a year or two, go to the casino. You got the same amount of chance. Okay. But we know statistically, if I drew the stock market on the wall right there and I had a 10-year time frame, you're not going to lose principal. There's no history where you went down. The longer you can be in a variable annuity or in a mutual fund or in the market, the better off you're going to be. They typically will outperform what that guaranteed fixed account is. So that's where they fit.
How long do you see that is? So if you were going to talk to a client or a potential customer and they let's say they had $250,000 that they were going to put into a variable annuity. And you may even spread that risk around, but let's just say all $250,000 go into a variable annuity. Do you see that they need to keep that there at a minimum 5 years, 10 years, 15 years? What's that target from an age perspective?
Minimum 5, and I love all the technology, and I'm going to dig into AI and all that later. But what I want to tell you, I can get within 5% of a $50,000, software that you calculate this based on everything, every variable on the planet, and it's a simple format. You take your age, you subtract it from 100. Whatever your age is needs to be in something secure, like that fixed account that's not going to fluctuate. The remaining amount, if you're let's say if you're 30% is in a guaranteed account. It's earning interest not tied to the market. 70 is in a variable annuity that will fluctuate. As you get older, what naturally happens, now I'm 50. Well, I need half of my money to be in the fixed account. The other half can be variable. I'm 70, need only have 30 at risk. Well, that whole principle is a funnel. Think of this. A funnel has a big wide neck. It comes down, has a tube. I explained this to clients 30 years ago. That tube is 5 years of your income. So we need to make sure that tube is in something fixed. The top part that's going to take 20 years even to get to the tube, that's where we're going to invest in variable in the market, in the mutual funds. And so that's why it's so important to have an annual review with your client. Just rebalancing them, put them right back in it. But that formula I just told you, all the guys out there that are building this software and have all these analytics behind it, I guarantee you I'm 5% from whatever they're projecting and building. Just using that formula.
That's cool.
That's a
That's
jewel.
cool to see. And that is a gem right there.
It is.
So
It is.
as you
It
are
is.
looking and investing, and I think that it's super important because I feel like the younger generation, including myself. So when I say the younger generation, I'm thinking of myself here. I like to think that I'm smart. I was a finance econ background. I love to do investments and I see investments myself, and I've done a lot of investing myself. And I think a lot of the younger demographic defines themselves in that place. They'll do their own investing through, I don't do it through this, but I think of the Archer, Robinhood. So they'll utilize, they'll do Robinhood through the app or whatever. Kind of talk about, if you don't mind, why it would be important to still have a financial advisor, even in the younger demographic. Because I feel like a lot of the older you are, the more that you begin to think, man, I really should have this stuff in place. And then you go to a financial advisor. The older demographic wants financial advisors. I think a younger demographic does too. But
It's a lack of knowledge.
You see them really try and do it on their own. And they gotta face some failure first. But talk why they should have a financial advisor.
Yeah, I don't care where you are in your career. Excuse me, not your personal life, the age. It's important to have somebody that specializes in things. It's what do they say? A jack of all trade and a master of none.
Yeah.
That's basically what you're doing when you do it on your own.
Yeah.
I've been in the industry for a while, and I know a lot of things, but I still get advice and advisors. So things like attorneys that, hey, how's this going to line up for trust purposes?
Yeah.
Things like, this is what I'd like my income to look like 15 years from now. What does my portfolio need to look now to get there?
Yeah.
So, and this is what I do now, and it's funny how it evolved in that, is having specialists in different areas. So it's not bad, when you're brand new out of college, just got a new job. Maybe you don't need, Merrill Lynch and an advisor and CPA and all that. But it's good to get educated on that. And then having an advisor, the teams of advisors that I build, everybody's a specialist. They're usually a team of a minimum of 3 people on the team. It's a investment guy, a CPA, an attorney, and then in there, a lot of times the investment guy has a background in insurance, the ones that I pick.
Like life, you think life, think annuity, think products of that nature. Because investments is more. Investments is just. I mean, when you think of investments, a lot of people think of the stock market, stock. It's more than just that. You got to protect your assets. You need to have, and the attorney, the trust attorney, that's just as important. And if you don't know what a trust is, essentially you can label or lump your assets within a vehicle, and not even a vehicle. It's just an account that protects assets when you die. It doesn't go through probate. It's not going to go through the state. You can have some protection from that standpoint. You essentially you lay out in your trust your assets, what you want it to be done with. Your house, your mortgage, your life insurance, everything. So
the good word there is dictate from the grave.
Yes, dictate from the grave, 100%. And it's important to have that because as young people, though, we don't think of death. We think we're invincible. We don't think that we need health insurance. We think we're invincible once again. But these things are important to do. And the younger you are when you establish a trust, typically the less expensive it's going to cost because you don't have as many assets. You don't have it require as much time from an attorney. And there's great resources. If you need a resource, please reach out. We have resources for trust attorneys that can help put something together for you. Even if it's just some cars or a home or first home that you have, I still think it's important to have those things established because you just never know what can happen. We all like to not think that death is right around the corner, but any day could be our last day.
Not a matter of if, but
when. We're gonna die.
Yeah.
It's a matter of when. So it's important to have protections in place. So that's why when Tom brings up a trust, that's what a trust can do for you and your assets.
I like that, Tom, and I'm going to stay there for a little bit longer, Luke. Yeah. Tell us, Tom, what financial advice, right, knowing what you know now, what financial advice would you give your younger self? What would that be?
Yeah, it would have been, and what's amazing is when I was with Valak, we had software, and software could project and illustrate, and I predicted, I just said, okay, I wasn't married or anything, didn't have kids, so I said, 30-ish. Good age. I'm going to start planning for this. I put in there December 1st. Kid, start saving, put money away. And it's almost eerie finding that. I have a son, Daniel, born December 1st. The exact presentation. And I did not plan it. But I looked at this and said, wow, this is amazing.
Yeah.
So planning ahead. And here's the bottom line. And I'm going to give you a lot of just basic fundamental stuff.
Yeah.
And that I think gets overshadowed with all the technology and knowledge and things you can get out there. But, just thinking ahead, planning ahead. Think about how many people are in debt right now with credit cards. How that
trillions of dollars.
Yeah, they're slaves to paying that interest. Well, do the math of buying a car and at 5% interest even, what that car costs 6 years from now. And go backwards and say, if you planned and saved for that and you were earning 5% and you planned 10 years ago to put money away, you're going to be knocking out that car with one lump sum that you saved and paid probably 3/4 of the price of the car instead of, 1.5 times with interest.
Cars, fun fact, are one of the worst investments you can make.
Drive it off the lot.
Yeah, I mean, it really, it's proven. They've come out with several articles of how much they depreciate in value. They don't hold value. It doesn't matter how well you take care of it. It doesn't matter what type of car you buy. They are one of the worst investments for the average American to go out and purchase, unfortunately.
Yep, you're 100% right. What you say when drop it off the lot,
It
boom,
depreciates.
Hey, and I faced that personally. I'm talking from experience. All right? So,
I'm glad you put your hand up.
I've made that mistake a time or two.
I was
Okay?
waiting. At least you're honest.
Everybody has.
Absolutely.
Yeah. So, but no, I mean, I like to drive nice cars, and at the reality, you have to measure, what's it worth to you. But at the same time, if you ever look at how much you're going to pay over those 6 years, how much more you pay over the value of the car, even at a 5% interest, it's stupid.
Yeah.
It's a stupid amount. It's like, wow. I'm essentially financing this for an additional $20,000 over six years. That doesn't sound like a whole lot of fun to me. I'm paying $20,000 above the value of the car. That's why people always find themselves upside down in cars, because they're spending additional money for the car. I mean, the bank has to make money somehow, but still, you look at that, and then the second thing is it depreciates in value. The second you drive off that lot, you go ahead and take 20 off the car.
Yes.
On top of the 20 you're going to pay over the 6 years.
Sheesh. You're in the hole.
Yeah. But no. Your question though was, what other advice would you give to yourself, your younger self?
I should have bet on the 49ers, not Miami Dolphins.
Dan Marino let you down. Uh-oh. Made the Super Bowl his first year, never made it back.
That one I still remember. So, that's a good advice.
I take it you're a Dolphin fan then? Still to this day, or what?
Well, where I grew up, or when I grew up, we had 4 television channels.
Yeah.
We didn't have cable. It
Yeah.
was ABC, NBC, CBS, and PBS.
PBS, yes.
And growing up in Birmingham, Birmingham was a huge college football. So it was Alabama or Auburn's going to be on TV.
Which one's your team?
Roll Tide.
Roll Tide.
You're wearing Auburn orange right now, so I didn't know.
It's not Auburn, nor is it Tennessee. Nope. So, being in Birmingham, we didn't have exposure to all the things.
Yeah.
So the TV on Sunday would have either the New Orleans Saints or Dallas Cowboys.
Yep.
But being an Alabama fan, there was this show on Sunday that would recap Saturday's game. It was called the Bear Bryant Show. So everybody had to watch. Well, my dad made us watch it. So we were watching that on Sundays and not pro football. So
I'm shocked they didn't have the Falcons on, given how close.
I don't know if they were that popular back then. Honestly, they just wasn't. For some reason, Dallas, America's team, made all the networks, and then New Orleans. I think at the time, Mannings that y'all didn't know, not Eli and Peyton, but their dad was playing, and he was real popular, and he was from Ole Miss, SEC school, so I think that drew a lot of the attention. So.
For sure. Yeah, no, that's fun.
That's
fun,
an important fact.
Fun fact. Fun fact.
Another one.
I've stayed in Birmingham, Alabama, as recent as 3 years ago. Fun fact: I was driving to Florida, had the kids in the car. Long drive to get to Birmingham, Alabama from Kansas City. Oh, yeah. And we were going to the Panhandle. We were staying on 30A. And we get to Birmingham. I'm like so exhausted. I'm the type of person that I like to drive. My wife doesn't drive anywhere we go. I'm driving. Right. Like it doesn't matter what car we're taking, I'm driving the car. If it's her car, I drive her car. If it's my car, I'm driving my car. And so I just like to drive. And we wake up at like 6 a.m. because we know if we wake up early, Lake, my son, would do like a feeding, a bottle of milk and then fall back asleep. And if we could get started, early, it may have been even 5. If we get started early enough, he would sleep the first 2.5, 3 hours. And then we'd stop in St. Louis because we made it St. Louis. And we would stop for like a late breakfast, mid-breakfast. We get all the way to Birmingham. Long day. I'm like falling asleep. It's the only time it's ever happened.
Gosh.
And I've driven to Vail, and I've driven to Florida, Tampa. I've driven to South Carolina, Hilton Head. I've always been able to drive and be fine. And I mean, I am like just barely keeping my eyes. It's a weird feeling, but it's the feeling where you're driving, you're doing everything to keep your eyes open, but you're falling asleep.
Oh, I know
with your eyes open. Mm-hmm. Your eyes are open, and it's like you jerk. You're like you can't stay awake. You know what I'm talking about? It's one of those. And so we're like 45 minutes from the hotel in Birmingham, and I'm like, babe, I pull over. You're gonna have to drive. I've jerked myself now 4 times. I'm falling asleep. So I went in the back. I remember falling asleep. Well, we get down to the hotel, we're staying, whatever. We're waking up the next morning to finish the drive. We get up, and I mean, I got a flat tire. Oh, no. It's Sunday, Birmingham, Alabama. Mm-hmm. Nothing is open.
Nope. What do you do?
I don't have any roadside service. I got nothing, and I mean, my tire is flat. I got a nail in the sidewall. I can see it. It wasn't the sidewall. It was close, but it was still in there. So we go to Walmart. I was able to pump it, do an air pump on it, so we could at least get air in it, but it was losing as much air as you couldn't drive more than 10 minutes on it. And we go to Walmart, we get a plug. We were able to, luckily, a nice gentleman, Alabama gentleman in Birmingham, Alabama, came out of his garage that worked on cars, and he jacked the car up and at least pulled the tire off for us. And pull the tire off, we pull the nail out, stuck a plug in it, put the glue around it, got the glue, cut the plug, did it all, changed the tire, filled the tire back up, threw it back on, drove the rest of the way.
Beautiful.
Couldn't have been the most jankiest way to fix a tire. But we fixed that sucker so it could drive the rest of the way, and drove it back home and drove it very easy until I could get a sufficient plug for the tire. But at the end of the day, that's my Birmingham, Alabama
That's
story.
Your Alabama story.
Nothing Sunday, and I mean most of the town. I'm not kidding. Sundays it's closed. It's shut down. Yeah. And we were lucky to find a garage that was open that would jack the car. And I paid the guy. All he did was jack the car up, and undo the bolts on the wheel and everything. Pulled it off for us. And I was like, here's $150. He spent 10 minutes on it. Here's $150. You have no idea how much of a savior you've been today, because nobody else would.
Absolutely.
No, not at all.
Unless they were going to do it for us and do it and rebalance the whole thing, it would have been a rough day. But that's my Birmingham. I had to share that because you're from Birmingham.
Here you had a good Samaritan.
Yeah, a good Samaritan out of Birmingham, Alabama.
Absolutely.
Awesome.
Absolutely.
What other question you have with Tom? Mark?
Well, this is fun. This has been fun for me. First of all, our whiskeys they're gone. Hey,
you want a little?
It's gonna be hot, Luke, but I'll take a little more. Yeah, I'll take a little more, and I'll get to the next question
so I haven't caught it.
Tell me, Tom, what is the biggest financial myth, right, that you hear, that you wish people would just stop believing or stop saying? What is that you hear?
Wow. Well, imagine me saying this, that life insurance, I don't need it. It's only if I die.
Yeah.
Yep.
I'll run through where planning comes in.
Yeah.
and how it works and why it works.
Yes.
So, and let me just do real quick, since we're talking history.
Absolutely.
The evolution of life insurance.
Absolutely.
Yeah.
So life insurance is not the term policy or whole life that your parents bought years ago. Term insurance basically, it started off annually renewable and it lasted a term. And then every year the premium went up. So then they got smart and made lock in a rate for 10 years, 15, 20, or 30. So you had a time period. You had to die to use it, period. Whole life was next. Whole life was a way that you could put a portion in the cash value that would help offset the premiums when they got higher, the cost of insurance as you got older. So you overpaid in the beginning and that money went into cash. And as you got older, the cost of insurance was higher. Your premium stayed level, but they were drawing it off the cash to keep it equal.
Yep.
That was cool.
Yeah.
Tied to the insurance company, fixed rates. Stock market comes to play, starts doing well. I think who was it? EF Hutton, maybe somebody, I think was the first company that came out with Universal Life.
Yeah.
Universal Life unlocked that cash value from the insurance company's reserves. It came straight to an interest-bearing account.
Yeah.
Stock market comes in, now variable Universal Life starts. Stock market crashes. Policies aren't performing. Hey, they get things in the mail. Hey, your policy's going to lapse if you don't send us another $1,000 like in 3 days. So now the industry's like, oh crap.
Yeah.
So there's this new thing called Index Universal Life, and now that investment side in the cash has where your principal's guaranteed, and you've got the chance for hires. So that's the evolution. But what's really cool statistic, and it just happened this year, when someone dies, a death benefit's paid out. Obviously, that's the purpose of life insurance. The evolution, since everything I just talked about, there's been additions of what's called living benefit riders. You put a rider on your policy, and what it does is it'll, while you're alive, you haven't died, you're the insured, but some condition hits you. You have a heart attack, you have a stroke, or you have to go in a nursing home. You can tap in and accelerate your death benefit and pay for those costs now.
Really?
And that's called living benefits. This year, what happened, payouts for life insurance, is the first year that more money was paid out for living benefits than for death benefits.
Wow.
So people are utilizing that, and that's a story that does not get out there. Life insurance has this stigma that, I got to die to use it.
Yeah.
Well, I can give you 15 reasons why you want to use it for tax planning, for retirement planning, for long-term care needs, anything like that. So, I mentioned term insurance, whole life, universal, variable, and index. Well, all those have a design, but living benefits has really become popular, and I use it all over the board. It's like you mentioned the word foundation.
Yeah.
Whenever you do investment or financial planning, that's the foundation that keeps everything intact. If something, God forbid, happens to you, it helps your family stay alive. It keeps that plan in place. If you're a business owner and you buy it for business, keeps that business running. It actually keeps those employees employed because the business is still running. And then from that, the accelerated of death benefits, if you do need something for a stroke or, assisted living, home health care, any of that, you can tap into your death benefit. And that is phenomenal because anybody that's ever looked at the long-term care policy, a true long-term care policy, so many companies have gotten out of that business because their actuaries didn't.
It's horrible.
Yeah.
They had some bad actuaries on the LTC.
That whole industry in the beginning took the tables from life insurance expectancy and how people lapse policies and said, it's going to be the same for long-term care. Well, nobody lapsed their long-term care policy because they're going to
long-term care
Exactly.
is making a resurgence. Like there's more and more people asking about long-term care to us as an agency than I've ever seen in the last 5 years. The last 24 months, higher uptick in people asking for long-term care.
Well, it's the aging of America and what's happening and what's needing. And what's more important that the younger generation needs to look at is their parents.
Yeah.
Because guess who's going to be taking care of their parents if they're not?
Exactly.
And I've seen, 40-year-old financial plans involving, okay, I'm going to pay for this for my mom and dad.
The cost of care alone.
Yeah.
I mean, you get a long-term care policy, even at $8,000 a month that you're getting for a long-term care policy. That may not even be enough.
No, not at all.
To cover some of the needs that some family members or parents that go through.
Yep.
I mean, you can go through $8,000 a month easily, especially if you need someone constant care. Ryan Smith right now, one of our vice president of sales on the Aspire side, you met when you first walked in. Yeah. His dad has got horrible dementia, and he's in a nursing care facility full time now. And luckily he had a long-term care policy, but that long-term care policy within 4.5 years will be eaten up.
Oh yeah,
totally. And then you gotta mortgage a house. You gotta be able to mortgage something in order to afford that. He's in a tough situation though. His dementia is so bad that they're giving him 18 months realistically to live. It's a horrible situation, but that's the reality. You got to be able to have those things in place. Otherwise, you're gonna be spending 10, 11, 12, 15 grand a month to be able to even have the quality care that some people need in those instances, because it had gotten so bad that his dementia was horrible that he was losing it.
Yeah.
His wife couldn't handle it anymore. Couldn't help with the care that he really needed.
Well, you think of the emotional distress, the physical distress. So what they're showing now, the statistics are on caregivers, how their health is diminished.
Yeah.
And think of what drain that is. If you got a family you're taking care of, I got to take care of the kids and I got to take care of my mom or my dad.
Whoa.
And then you get these constant calls. Oh, he slipped, broke his hip. I got to go get him. It's unbelievable. And the myth that, the government will take care of this. Well, you have to literally spend all your assets and be down to $2,000 before the government even will look at it.
So, and what he means by
that, for a subpar, place to take care of
at-home facility or in-home facility of any kind, or a nursing home facility full time. And what he means by that is very true. A lot of those full-time caregiver scenarios, they will not let you come in unless your mortgage is gone, you've sold your home. They won't let you come in. When he says your assets got to be a certain level to be able to even get the access to care, that's what that means. And that's a very true story. So if you don't have a policy that covers it, you got to get rid of all assets. And all assets in order to go.
It's
horrible.
crazy. It's really a sad thing. You literally, it's just what it is. You have to be destitute in order to, like you said,
totally.
That's just what it is.
Yeah. And don't
in that
think
regard.
you go give your assets to your brother.
All those assets, all that money is going to go in for your care.
You got to document 5 years minimum.
Yes.
And if you try that, oh my goodness, it's not only a penalty, but
it's a legit thing.
Lock me up.
That's why a long-term care. Once again, I'll say this to the listeners: if you're interested in a long-term care policy and how it could be beneficial, it's super, super important, because even if you're the wealthy of wealthy, I've talked with trustees that manage the ultra wealthy before, and they think that the current asset book or block that they manage can't be impacted negatively. And I'm the true story. One of the trustees that we spoke to for a guy that was super wealthy, he was looking at a long-term care policy for his wife. He had seen some health issues decline, but not to the point where it was horrible yet. And within 4 months of a conversation with the trustee, and the trustee said, this will perform fine. We can handle whatever financial obligation out of the trust. Within 4 months, the wife had a degenerative disease that required full-time care. Where if they would have had, and that's actually a good question. I need to look into what would have happened if they had a long-term care policy and within 4 months the disease comes in. Is there any type of waiting periods on those types of plans or not?
No, they work like this. You can get a 30, 60, 90-day waiting period, and you do your math. But think of this. I don't care how wealthy you are. Cents on the dollar is thinking in an investment wise. Do I want to? The biggest mistake I see guys with big portfolios, I don't need that. I'll just self-insure.
Exactly.
Well,
a lot of that.
Yeah. I don't even ask them to spend money. I'll say, look, let's take your portfolio. Let's just reposition some assets. And that pennies on the dollars instead of the same thing we're talking about investing and buying a car.
Yeah.
Do you want to pay extremely a lot, or do you want to invest?
That's what
in
I
it
tell.
before?
That's what I tell some of the trustees, where they think, "Oh, there's several $1 million in the trust." I'm like, "Well, do you really want to spend $1 million on care, or would you rather have a policy take most of the $1 million hit? Which one would you rather have? Where you could have the savings. Yes, it's going to require more investment up front on a policy for the protection, but you're saving yourself long term."
Well, if
100%.
you've got a big portfolio like that, I'm serious. Half the time what I do, I say, look, all I'm going to do is ask you to take some money out of this pocket, put it in this pocket, but make sure this pocket's a lot bigger, because when you put it in there, it's going to do a lot more for you. Yep. I didn't ask him for a monthly premium. I didn't do this. I just said, we're just going to reposition some things. And that's a lot of strategies that some advisors don't really take advantage of because they're not specialists. Yeah. That's what I do now, is I hook together partnerships with specialists. Yeah. So I think that's very important to have somebody, like I said in the beginning, not a jack of all trades and a master of none. Yep. Have a team work with
that
you.
specializes in those pieces, so they can really give you the advice that you need.
Yeah.
Man.
Well, one last thing as we wrap up, because we could talk for
we can go on.
We can go for hours. And we're hitting up against time frame here. One last thing that I always love to ask any guest that comes onto the podcast. Yeah. You know, the listeners, what would be one thing that you would want them to leave with, knowing that you've come from on the podcast? What's that one thing you would want them to learn or know?
I think planning your future as an advisor, an investment representative, salesperson, anything in your career, understand this. What you see now, there's a 90% chance your future's not going to be that. And there's these things that happen from the left and the right that guides you. Yep. My main thing and what I live by is God gave you a gift. It's what you do with that gift is your gift back to God. So find out what drives you, what you like doing. Yeah. And then focus on that path. And, from there, when I say, you're going to go 1 or 2, 3 different ways, I'll close with the path for the financial advisors that I recruit. When I'm talking to a brand new career changer, never been in this business. Yeah. It's going to be, okay, you're going to come in, you're going to learn something. You're going to learn, you're either going to learn how to work with a certain type of person that's maybe a certain age, and you just mesh with them and you relate with them. As you're going through that, there's going to be products and different things that really relate to that market. You're either going to go, wow, I really like this, and you dig into that product and you kind of specialize, not meaning to, but you get good at it. That's what happens. And then you just go down that trail for that market. What happens sometimes, accidentally, you may hit a network when you're working, and it's driven from network, not product. Yeah. And that could be, I started working with nurses, and really understand them, and wow, I got invited to an association meeting. I got invited to this, and I really kind of click with these guys. And now you're in a market. Yeah. So you're either going to get product driven, market driven, and as you get going, the next thing that happens is you get good at something, and one of your bosses says, hey, wait, why don't you come into management? And then that's another tier. So it's going to be, wow, do I want to decide if I want to get into management, or do I want to be a specialist in what I really like doing? And sometimes it's both. So don't think, you can point at something 30 years from now and say, that's what I'm going to do. Yeah. Because it's probably going to deviate.
Oh, yeah. But I've already seen that in a decade of being in the business. I've seen where the business has changed multiple times over just even a decade.
Yeah, I know your dad. When we first met, we were at Chiefs game, and he's talking about, I got in after all this mess happened, so I'm a little different than everybody because the industry changes. So, So, leaving with that, back to God, you got a gift. Nurture that gift, and follow your heart, man. That's cool. Makes you happy and makes you successful.
Yeah. Well, thank you, Tom, for coming on the podcast.
Absolutely.
And we appreciate you bringing the bottle of whiskey. This is awesome, and it's a new one that we've never tried before, which is always a great thing.
Pretty dang good too.
What I'll end with is another toast for Tom Morgan coming on to the Whiskey and Insurance. Whiskey for the souls,
didn't wanna miss
insurance
that
for the wallets.
Absolutely. Until next time, thank you guys.
Thank you.
This has been the Whiskey and Insurance Podcast, brought to you by Apollo Health Insurance. Don't forget to subscribe, follow us on Spotify, and be sure to RSVP to our first live podcast event on September 10th.